Okay, the hard part is done. The product has been manufactured, it's in our ending inventory, and it's ready to be sold. And the same concept applies to the knowledge that you're bringing through the chapter. We've accounted for all the material, all the labor. We've allocated our overhead. And now we've got the product finished, and we need to move it out of work in process into finished goods. And once it's sold, out of finished goods into cost of goods sold on the income statement. So let's take a look at how that happens. So as we've been moving through the chapter, as we've been moving through the objectives, we've been accumulating the material, labor, and overhead cost. We've been tracking them by job, and now that we have the job complete, we need to account for the sale. And to account for the sale, we need to know what the cost of the completed job happened to be, and then we'll adjust for any overhead that may have been in excess or not enough at the end of the period. Okay, so if in transaction 9 our jobs are complete and it says that we have $644,600 worth of cost of goods, remember we're talking about cost of goods manufactured, all right? All of our material, labor, and overhead. And as we talked about as we were going through the chapter, as we're working on the job, everything's going into work in process. And remember, everything was a debit going into work in process. Now it's finished. So in order to move it out, we have a credit. So we credit work in process to get the job 27 out, or 28. And where do we move it? We move it to finished goods inventory, still on our balance sheet. All we have done with this journal entry is simply said, I have inventory that is now complete instead of in work in process. And if we'll go back and take a look at the illustration we used in the beginning, this is the part of the transaction that we see taking place now with numbers in our debits and credits instead of actual dollar amounts instead of job numbers. Okay, so remember, all of those costs were originally debited to work in process. Now we are crediting work in process to show that those jobs have moved out and cost of goods manufactured has been determined. We know the completed cost of this job, and these costs are now can now be found in the finished goods inventory section of our general ledger. Okay, so what happens when we sell them? Okay, back to some of the original debits and credits that you did in Principles 1. We have sold our products, so we have sales. Remember, revenue and sales are a credit. So we credit sales for $1.2 million. We debit accounts receivable or cash, whatever we happen to be collecting as a result of this sale. But we need to get the inventory that we have sold out of finished goods inventory and into cost of goods sold. All right, so remember, we are moving it off of the balance sheet, and we are moving it onto the income statement. Okay, make that look a little better for you there. All right, so the finished goods inventory that was sitting out on our balance sheet at $584,600 has now been sold, and we're going to move that cost over to cost of goods sold on the income statement. Remember, we're matching revenue with expense. Once again, if we go back to our original illustration, this is the part that we see taking place now with dollar numbers, with dollars instead of job numbers. And so as the merchandise has been sold, we're taking it out of finished goods and we're moving it over to the income statement as cost of goods sold. But I can't do that if I don't know cost of goods manufactured, which is going to include all the material, the labor, and the manufacturing overhead that we started with. So I hope you can kind of begin to see the accumulation and the tracking, the completion and the removal of costs from our balance sheet taking place now. All right, so that's the basic part of manufacturing and moving the cost through the manufacturing process for a job order costing system, and then selling a product. Take a break and we'll come back and take a look at one final element on how we adjust for the overhead that might be left in our account.